Well, good evening, folks. A quick Sunday evening update. I'm going to cover a few things. This is a very quick update, and we'll cover natural gas and oil, perhaps some sugar. We'll have a look at gold and I think some of the other metals, and then stocks, and then a couple of the major currencies and the yen pairs. Let's start with natural gas. So this is the day chart on natural gas. I think a lot of people are surprised at this pullback all the way back down into the center of this channel, and actually below the channel center line and some of the supports, the 20-day moving average we've left behind us 2 days ago, and just moving down. We've got the 50-day moving average just below us, and this gap, this weekend gap that we left behind some time ago. Now remember, we broke out through the top of the channel, we formed this reversal pattern, we started selling natural gas here, and we got out somewhere around about $3.15 or 10 cents, and I started to buy back into this at about $3.07, I think $3.06. We're now down at $2.90. So it's gone a little bit further than I expected and most other people expected, $3 being the breakout level, the top of this channel over here. But more importantly, the 285 level, which is now approaching, is actually the key support level. You can see this more easily on the 4-hour chart, and let's switch across to that. And I'm looking at this very, very closely at the moment. Now here's the 4-hour chart on natural gas, and that's that level I'm talking about. That's the 285-ish level. And if I just zoom out, you can see that's the level where we had the most attempts to break through, apart from the $3 level. Most of the time that we sort of rallied up there, we got to about the 285 level. There you can see it on multiple occasions, and fell back down. Once we broke up through there, it acted as a support level, and we went up to the top of this channel. I've drawn a new channel in there now, a higher up one. So we've created a slightly higher sort of ledge to that channel. And the 285 level where we are now is just above that gap. You can't see the gap on this 4-hour chart because of the nature of this broker, but you could see it on the earlier day chart that I showed you. So this is this key level. Now look at, if I zoom in, what's happening here. We've got that key support level, this pink zone. We've also got the 200 period moving average, simple moving average, the purple line, which is where we're bouncing or trying to bounce right now. That was the last 4-hour candle on Friday, and we just bounced up above there and tried to hold. Whether we'll hold there or not, I don't know, but I'll be watching this level very closely, looking for a bounce, looking for a confirmation on the 4-hour. Let's see how this weekend rollover comes about, and whether we'll dip down or bounce up from here or just stay where we are. Some of the times on the weekends we just move across into the Sunday night or Monday at more or less the same price. Sometimes we gap up, sometimes we gap down. Below us, we've got more support at the channel bottom, getting down towards the 255 to 260 level. These areas down here is a pretty key support level at around 268, somewhere around there. Then we got the 265, and then the 250 level, which is the dividing line between the bulls and the bears, I think. And we go back to the day chart, you'll see that more clearly. So we're going to be looking to buy natural gas at the current level. It may be that we've got to fill this gap though. If we do fill this gap, we'll get down to the bottom of the channel. That's at about $2.70. To me, that looks like actually the best level to buy at now. In hindsight, we could just get to the gap. Remember, the top of the gap will act as a support level. The bottom of the gap will act as a support level. The bottom of the gap's at 270. The top of the gap is at 285. Those are the levels that we're trading at around about now. And that green line in the middle, the dividing line between the bulls and the bears, is at 250. Everything below there is kind of bearish. Everything above there is kind of bullish. When we did manage to break up and close for a sustained level of time or period of time above 250, you can see we never closed beneath there again on a daily basis. So we still haven't done that, and that's going all the way back to June this year. So if we can hold 250, we should be okay for another move back up to test these highs. And where we're going to end up towards at the end of this year, I showed you a chart on X, and actually in the last video, that 7 years out of the last 11, I think, or 12, we've closed below $3 on natural gas, despite that being the coldest period of the year. Most of the time, we're below $3, at least in the last 11 or 12 years. So that's natural gas. Looking to buy somewhere around 285, that's the top of this gap, or down to 270-ish, 268, 270, that's the bottom of this gap. If we can hold that and this channel bottom, then we'd be good to go. However, these channels are always very tempting to break. We've got to clean out some hands at some stage, and a break below the bottom of this channel could take us back down to the 250 level, a channel break, a clean out, and new liquidity to buy for a move back higher. So let's see how we go on that. I'm not going to cover too many of these others right now, just to quickly briefly mention Bitcoin. We're long on Bitcoin. That's moving up quite nicely on the day chart. Let's have a look at that for 15 seconds. So Bitcoin, we bought somewhere around this red line, actually a little bit lower, closer to this 200 period moving average at 28,000. We're now at 29, almost at 30,000. In fact, we went through 30,000 on Friday, and that's where we're trading at the moment. So this is the Coinbase chart. Actually, this is today. This is Sunday. So actually, this is a 24/7 chart, unlike my broker. So that's where we are, just pushing higher. So we're in long, closer, I think 28,200. We added a little bit more, around 28,500 or 600 after the break above this horizontal line. And I think Bitcoin could go back up to around about 32,000. And then actually a lot higher. A lot depends on the stock markets and where we go with the dollar, the 10-year yield and the markets, and risk on, risk off, the Fed, all sorts of stuff going on in the world, including problems like war in the Middle East and in Ukraine, and oil prices and all sorts of things that are going into it, making this a very complicated and messy market. But for now, Bitcoin looks pretty good. We may have a chance of not quite making that high and then moving down. But I think overall this is looking quite constructive, and I like this double bottom here. I like the fact that we're above all the moving averages now, the 200, the 20, and the 50, and we've made this big double bottom on this day chart on Bitcoin. So for now we're long. Let's see how that goes. I don't know. And then the other one, we're short on sugar, for those of you who are trading sugar. Wheat, I don't have any trade positions on wheat, but I was thinking this might break down. We did break down. We got to the bottom of the channel and then bounced back up again. So we did get sort of an idea that this was going to move lower, but it bounced off that channel on wheat. I'll do another video on wheat at another stage. Sugar we're short on, looking pretty good. Perhaps sometime in the near future, in the next few days, we might add to sugar, particularly on a daily close beneath 25 cents 50, 25.5 cents. We're at 26.5 cents right now, and we've been selling up into these rallies. And that looks like we might get a bit of a double top on sugar. So for those of you who are short along with us, I think this is looking pretty good. The interesting thing is that when oil prices go up, the sugar price goes up because of ethanol and sugar producing ethanol. So if WTI, which we're also short on, and Brent crude continue to move lower, then sugar should move down with it. Now, a lot of people don't agree with that correlation, but there is a correlation between sugar and crude oil, because when crude oil prices go up, people switch across to ethanol, and the extra demand on ethanol pushes sugar prices up because ethanol is produced from sugar. So that's an interesting correlation. And then talking about oil and sugar and WTI, this is our WTI chart. If you've been following me on Twitter and the last few videos, you will know that this was our selling area right up here, closer to the bottom of this channel. Well, we've been selling WTI, and that's just moved down. That was Friday's move, just bouncing down off the underside of that channel. Our target for WTI is down at around about $80, 80, call it $81, and then it moved down to this next support at around 78, which is where the 200 period moving averages, to exit this trade and see what happens thereafter. So that's all of that sort of thing. And then the only other thing, I don't want to talk about the other metals because it's a quick up, but let's talk about two things, uranium and gold. I'm actually short on one uranium ETF, that's the UEC ETF, and long on URA. So that's a bit of a complicated thing, but I did put some notes up on that on Twitter and also in my live trading room. If you're not a member of that, you can try that out for 14 days free of charge. So the link's below for that. And also, if you're not subscribed to this channel, consider subscribing. That's free of charge. There's also a membership option on this YouTube channel. And please give the video a thumbs up and a like. It really helps the channel. But let's start with URA rather than gold. So we're short on this, and we've been selling occasionally on that break above the channel. I think that this could move a little bit further down and perhaps get down to the bottom of this channel and perhaps break down through the bottom of this channel and then begin to move higher. So that's the sort of path that we're looking for. Whether we're going to bounce here or not, I don't know. But we're long at $25. We're now at $25.70. We got to 26, so already moving into a decent profit. But I'm a little bit worried because the other ETF has formed this diamond pattern formation. Yeah, so here it is on my Twitter feed, X. If not following me on this, you can go across to X. It's ArcisFX, the same name as this channel. This is the UEC ETF on uranium. And look at this diamond pattern. So we've actually gone short on this. That's a classic diamond reversal pattern. This ETF moves much further and much faster than URA. And so whilst this rallied so dramatically, URA sort of edged up. This went from, I don't know, $2.40 up to $6.40. So a huge move up. Probably needs a bit of a pullback, and this might pull back. At the same time, URA, which doesn't move as dramatically, might pull back just a wee bit and then move up. This one might move back quite dramatically and then move up. So we're aiming for a short trade. We've got a short trade on this one, aiming for somewhere down here. I'm not quite sure. Maybe the 200 period moving average, which is this purple line at around, I don't know, $3.60 or 80. That'll begin to inch up, and then looking for a bounce and a reversal and a move higher. A lot of people got long on both of these ETFs, URA and UEC, and got stopped out after that break through the top of the channel, and then this collapsed back down again. I think we're trying a little bit long here, but I think if UEC begins to move down, we could follow this green path rather than bounce up directly from here. But it's worth trying a go, and we're just inching into this one, testing the waters, I think, on URA, just going long on that one and short on the other one, which is a little bit weird, I know. But, you know, who knows? Sometimes these weird things work out in trading. Then gold, well, we've been long in gold for a long time, and this move all the way up to $2,000. We're now short on gold, but just a tiny little bit. I put this in my live stream for members on Friday, and just trying a little short here for probably a $50 pullback. Every time we've had these big moves, if I just zoom out, that move there was about 10%, and that move there was about 10%, 9, 10, 11%. Both of these moves before a pullback of about 30, 40, 50, 60, $70, I think in this case. And we've now got the opportunity to pull back about 30, 40, 50, 60 or $70 on this one too before a move up. I don't think we'll get quite as deep as this green line suggests. I think we could probably move that up and drag that up a little bit, and perhaps even a little bit higher than that. Not quite as high. Something like that, maybe, or maybe just straight up. I don't know. We'll have a look at that one. But for now, we're going to try and catch a little bit of that move back down, a pull back into these supports. And I think around about 1945, maybe 1900 at the worst, before gold resumes this uptrend. Very strong move upwards, and often these are continued and not reversed. And I'll tell you why I think that is, because the last 3 times, or the last 2 times that happened, big move up, a pullback, a 10% move up, about a I don't know, $50 pullback, and then continuation. Same here, big move up, 10%-ish, $50 move downwards, a retracement, and then a continuation. And I hope to see the same sort of thing here. And you'll see this path that I've drawn in is pretty similar. And then hopefully back up to the all-time highs at 2070-ish. I think it's 2065. And then even higher as we break through there eventually. This will be the 4th occasion that we've tried. This is a triple top as it stands at the moment. We might get even higher and break through there and make this a quadruple top failure and a move higher. So that's what that triple top looks like. This is a bit stark, a bit too steep, but maybe something like that. And then aiming up for maybe 2,100, 2,200. We can measure that move from the various technicals on these charts, but I'm not going to do that now. But it's somewhere around about 2,150 to 2,200. That's the sort of path we're looking for on gold. So that's that. And we've talked about uranium, silver. I really don't want to talk about that for now. Uranium, platinum, and copper. Well, people often ask me about copper, so let's just cover that very quickly in this video. I don't trade copper, but generally I think copper is going to be weak. Even though gold is strong, I think a couple of the sort of investment type metals might be strong, but I think copper, with a declining economy, prospects for potential recession next year. China seems to be back on track, and their GDP seems to be improving and soaring, and all sorts of good numbers coming out of China. But actually copper doesn't show the same. It's moving down. We broke this very key trend line. We broke this very key support line. And on a daily basis, yes, we formed a spike low a couple of days ago. I think that was Wednesday, but then Friday just moving back down again. Can we hold that spike low? It's a wick bottom, a bottoming tail, as some call it. If we hold above that bottoming tail, perhaps retest it once or twice and then move higher. Maybe there's a bit of legs in this move up on copper, I don't know. But I think there's a risk on copper, and that is that the economic demand on copper is going to continue to dwindle. We've seen very poor housing numbers starting to creep in around the world, and that's where copper generally gets used, amongst other things, but the housing and development building market is a key part of the copper market, and we're seeing that actually showing some weakness on Friday, and gold and everything else pulling back. But they've had a big rally. Copper has continued its slump. And then stocks, well, who knows what's going on with stocks? We went long on NASDAQ and S&P on Friday. Obviously not a great move. We are short on Nvidia, but long on NASDAQ and S&P. Just very small numbers, but this looks pretty weak. We've had 3 bearish candles in a row, but let's have a look at these more closely. Some people are still saying this is bullish. I don't know. We're at key support on NASDAQ right there. Very key support. We've got a little bit to go. We've actually got this downward sloping bottom of this channel a little bit further down at around 14,200. We're at 14,500 now, so not far to go to get to the bottom of that channel. And once we break that support level, the fear and greed index will go into crazy extreme fear most probably. And we know when that gets into extreme fear, you can go across to CNN to have a look at the fear and greed index if you want to. So there we go. That's the fear and greed index as we finished on Friday, and just teetering on this brink of extreme fear. So as soon as we move into the extreme fear type zone, it generally means it's time to start looking at buying stocks, not selling. Never sell when we move into extreme fear. Never buy when we move into extreme greed. The needle can stay there for quite a long time, but it does mean that if you're looking to buy the market, it's probably a better time than if we're at extreme greed. And if you're looking to sell the market, it's probably not a good time. So almost inching into extreme fear, not looking good in terms of that. It's a very emotive sort of chart, makes you think, hell, I don't want to be long on any of this stuff because we're moving into extreme fear. And when everyone's fearful, often it's the time to buy. So if we do get a breakdown to this channel bottom, we'll have broken support. We'll be getting closer to the 200 period moving average, which will inch higher as we go along, and we'll be getting down to the bottom of that channel. Still looks like a bull flag to me, and the extreme fear index will be on the gauge. The extreme fear will be on that gauge, and we'll be right down at the bottom. We've had 4 strong days down. If we get to 5 strong days down, or even slightly strong, 6, and if we get to 7 days down, we might just inch lower, and by the time we get there, we may have had 7 days. The 7 count, the 7, 9, 11, 13 counts are always good reversal days. So if we get down there on a 5 count, we're on 4 already, perhaps a 7 count, and we hit that bottom, we form a reversal, we get into extreme fear, we get to the channel bottom, it's a bull flag, we could move higher. I don't know, it's very tricky. The moment we break that support, there will be a lot of algos starting to sell, but how far they'll be able to push it down, I don't know. There's the 200 period moving average. Maybe we need to get that far, and we're still above it. But when we look at S&P, it's a different story altogether. I'm not going to look at individual stock names. We're, again, pretty close down to the bottom of this channel. We've broken through the 78.6 Fibonacci, which is not good. We've broken down and closed below the 200 period moving average with this candle, which is a shaven candle. It's got very little wick on the top, almost no wick no wick at the bottom, tiny wick at the top. So here we go, 200 period moving average, channel bottom, we're below the 786 and the 200, not good. There's the recent low. This is a 10% correction, I think. It is on the NASDAQ. I'm not sure if we got 10% on the S&P. Let's have a quick look from the top to the bottom. Let's see how far we got down to that level there. Actually, it's only 8.8%. The NASDAQ corrected 10% or a little bit more. So if we do get down to this level here, that will probably be a 10% correction, which means that that's a decent pullback and probably a good time to bounce. Let's have a look. If we get to the bottom there, that is, or the channel bottom, that will be 9.9%, so pretty close to 10%. Be a good place to consider buying the S&P. We'll be stopped out by then. Our stops are below these lows, so same on NASDAQ. But these are small positions, and we'll have to see what happens after that. We'll want to start to look for a signal of some sort that we may be rallying to new highs. Now, this is a very controversial topic. A lot of people think we are rallying to new highs. A lot of people think we're collapsing to massive lows in the next 6 months, 8 months, year or so. I don't know. And there's a lot of talk about Black October, Black Monday. Maybe it's this coming Monday. I don't know. Let's wait and see what happens. We've seen Nvidia moving down. We're short on Nvidia, and Apple moving down, breaking down, but still all of these are still above support. Microsoft's still holding up pretty well. I think Microsoft and Google, the other non-chip, non-Apple stocks, if I have to say. Apple, I think, is probably running into some problems, chips as well, with China. I think Nvidia has been just super overbought, too much hype over AI and chip stocks. And Apple, I think, just expensive and not a great release of their new kit, you know, the iPhone 15 and the new chips. It's just not great. It's not fantastic. And it hasn't been particularly well received. And of course, we've got China problems with Apple and chip stocks in general. So that's stocks. Now, interestingly, I think we'll just leave the Forex majors. This is probably the most interesting. Well, maybe we'll get to the Forex majors. This is probably the most interesting chart of all. And I'm actually even going to ignore the yen crosses, which are generally moving down, except for Swiss. The Swiss franc's been strong because gold has been strong for the same reason, and that's risk. When it comes to war and risk and markets in risk, people move into Swiss franc and move into gold simultaneously. We've seen the Swiss franc rally against the dollar and also against the yen. Now there are police driving past. So, but we've seen weakness in the CAD yen. We've seen weakness in the pound yen, just edging down quite nicely, actually. These are all 4-hour charts. Look how far the pound yen has moved down. Euro yen, it's moved down a wee bit. It's just at those highs there right now, but beginning to move down, not as much as the pound. Pound's been weak in general. Swiss yen, as I said, is strong, and then the Aussie yen, also pretty weak. But this one here, which will drag all the others down if it gets going, drag the other ones down even more quickly, is the dollar yen. Now, this is interesting, and I pointed this out in the last video, so have a look at that. I'll link to this at the end of this one, to that video at the end of this video. But we're at 150. 149.88. In fact, we got to 150. No, not quite. 149.99. That's the intervention level. And we've already seen that there's sort of trickle intervention. And this is the thing that's going on. We're just sort of pushing that down, holding down the dollar yen, the Bank of Japan, the market sentiment, all sorts of things, just keeping a lid on this because there's so much risk to the downside. Strengthening of the yen as we see intervention, as we see the dollar. We'll look at the dollar index shortly. As we see the dollar potentially beginning to roll over and move down, dragging down with it the dollar yen, dragging up the euro and the pound and so on. And so we've got fundamental market or structural market factors keeping a lid on this. But we've also got the Bank of Japan threats, verbal intervention, and some trickle physical intervention with real money, keeping a lid on here. The problem with keeping a lid on these markets is that once that lid blows off, the markets just go berserk. And this could just smash up through here and do what happened last time. Let's have a look at the day chart and see what happened last time. And let's go back. We've got to go back to October last year when we got through 150. We didn't close above 150. This is a day chart. And that level there, well, it's a 150.10. So the close we didn't really get above 150, but we saw this massive spike high up to 151.85. That was this blow off where the lid came off, the market went berserk, went up through that high, and then collapsed back down. Several rounds of intervention taking place then and then and then at different times, several days between each occasion, or weeks even. And if I have a look at this on the 4-hour chart or even the 1-hour chart, you can see how quick that was and how quickly it took place. And it's almost impossible to get into that trade unless you're in it, because the market will spike up and then smash down. If you've got a stop order in to sell, you'll get massive slippage, or it might not trigger your stop entry order at all and begin to move down, and you might just not get the trade. So there's all of that sort of thing going on. Could we get that blowout spike high? This is the 4-hour chart of that event in October 22. There, up we go, and then smash back down. So big sort of parabolic curve upwards. If we have a look at this on the hour chart, you'll see it even more dramatically. All of that move took place within an hour, and it was a massive move down. So there it is again, October the 19th, 2022. Very interestingly, the date today is October the 22nd, so this is almost precisely a year ago. Now look at that first move, intervention, from 150, call it 152, all the way down to 146. So that's 600 pips in the matter of 2 hours. I can't go back to the 15-minute chart or the 5-minute chart, but believe me, this took place super fast. So in 2 hours, we moved 600 pips. Then the market tried to edge up, but traders were beginning to fade these moves, and there was further threat by the Bank of Japan to keep a lid on this. We moved sideways, trying to push up, people fading this rally back into the market. I was doing the same thing. And then bang, once this was being a little bit too stubborn, a little bit too aggressive to the upside, Bank of Japan came in again. In the matter of 3 hours, we went down from 146 down to 141. So 500 pips. And then we saw that happen again on one more occasion a little bit later on, if I can show you over here. And then we moved down on this occasion. We're still hovering around 137, so significantly lower than previously, but then another smashing move down from 137 down to 133. So that's 400 pips. We got all the way down below 130. So that's the dollar yen. And when that happens, and mark my words, it's going to happen sometime in the coming days, if we hover around this 150 level for much longer, we're going to see a similar pattern to what we saw there. And whether the market's got the determination to continue that move, if the dollar overall starts to come down and the Bank of Japan intervenes repeatedly, we could see us moving down to around about 130, which is a long way down, 2,000 pips from where we are now. Doesn't look too far on this chart, actually, but it's an awful long way considering where we came from at around 106. I've been trading this currency pair since, I think, before 2000, and the defended level back then was 115 yen to the US dollar, but they weren't defending the upside on this chart, they were defending the downside. The Bank of Japan and the Japanese government wanted the yen to remain weaker. On this occasion, they want to get stronger. And that's where we are today. I wouldn't be surprised, in fact, in a few hours' time, Sunday night, it's often when they do it, or early hours, Monday morning, European time, that we could see some intervention taking place. It's just waiting for it right now. And on the 4-hour chart, you can see how this lid is waiting to actually blow off, and we could see a sudden rally up by 100, 150, 200 pips before this big smash down that we see. They did try over here a few days ago, October the 23rd. We now, was that October the 23rd? No, 3rd of October, 2023. We're now the 23rd of October. Tomorrow we will be, 2023. So 20 days later, will they do the same as this? And if they do this, will they keep that pressure on? And will the market finally capitulate and say, okay, that's it. This currency is not going to get past 150 and we're going lower, and then the market will start to consider selling this pair despite the carry trade. If you can make quick money on the way down, the carry trade is mitigated and this market will move down. If you can get into repeated trades or short-term trades and avoid carrying this position like I have done for a very long time, you can avoid those carry trade costs and take advantage of those short-term moves. The danger is, if you're not in it, you may not win it because these move so fast you might not get in. And then the FX majors and the dollar index, I've just actually removed all the lines from these charts, so we've got naked charts, but that's fine. Here's the dollar index, a beautiful, neat, long trend line upwards, beautiful trend line, very much like we saw on Apple. I pointed this out in my live stream. We saw the Apple chart, AAPL, almost identical to this. And when we broke down through that trend line, back tested it from underneath, all hell broke loose, chaos, and this market began to thrash around, create huge volatility and move lower. Will we see this on the dollar index? To me, it looks like we can see dollar weakness creeping into this market. It's been too neat for too long, too beautiful, and we're seeing the 10-year yield starting to perhaps make a top. I don't know. Let's have a look at that quickly and have a look at the US 10-year. So here's the US 10-year yield, again, a naked chart, so don't worry about that. But we formed a bearish engulfing tweezer top candle on Friday. That's that one there. It's a beautiful reversal candle. We've seen it several times. We broke through this tweezer top here. It was a tweezer top with 1 day separating in between. Managed to get down and moved down, and we broke up and we moved up there effortlessly, just sliced straight through it up to where we got to at around about 5%. I think we just touched 5%. We touched it the day before, Thursday. Friday we touched it again, made a tweezer top, a bearish engulfing candle. That is as good as it gets, folks, as a tweezer top. Identical shaped candles. identical highs, identical lows, little wicks at the bottom, and identical bodies. That's as good as it gets in the textbook for a tweezer top. Whether that'll play out in real life and continue to move lower, we'll have to wait and see. If it does, it'll bring the dollar down with it, and the other currencies will move up. Let's switch back to the dollar index, and that's what we're seeing on the dollar index. I showed you just now. There's that rising, beautiful, neat trend line. Too neat, too long, too perfect. Broke down, back tested from underneath, and just looking like it wants to move lower. And if that does happen, we should see the other Forex majors begin to rally. We're long on the euro, long on the pound. That's about it for now. And then the dollar Swiss franc, well, I wouldn't bet against the Swiss franc at the moment. But if we do see a little bit more stability coming back into the world, maybe this will gain some strength, the dollar against the Swiss franc. I don't know. But I think if the dollar comes off, this one's going to come off too. So that's it, folks. Have a great trading week next week. And the Open's coming up in a few hours' time. Good luck. And I wish you all the best. If you did enjoy this, please consider subscribing to the channel. I'd really appreciate it. And give this video a thumbs up. And if you want to join my private trading group for 14 days for free, you can link at the link below. And I'll see you inside. Take care.